The Portuguese economy has been running a current account surplus for the last 2 years, and according to trading economics projections, Portugal is expected to run a budget surplus in 2025. This shows that the country is determined to maintain fiscal discipline.
Look, I mean, there's different ways that you can look at it. So these 14 unicorns are worth more than $100 billion.
Every morning when you wake up to the Atlantic Ocean caressing your face, the sun setting on the streets, and the sad melodies of Fado echoing as you walk through the cobbled and narrow streets. Like the spirit of Portugal's streets, its economy has been growing in recent years. While unemployment has fallen in Portugal in recent years, purchasing power has increased, and the economy has maintained its growth momentum in recent years. At times, it even surpasses the EU average. The statistics prove it. According to Eurostat, it was the third country with the highest GDP growth in Europe in the third quarter of 2024 compared to the same period in 2023. But every system or policy has its side effects. The most dominant of these are currently rising house prices, low wages, and despite good growth in recent years, it is clear that prosperity is not evenly distributed. In this video, we will talk about the crises and miracles Portugal has experienced in its economic history. I want to give a detailed overview of the current good and bad sides, the reasons behind them, the hidden dynamics, and the long-term effects. Your help motivates me a lot while making these videos. Don't forget to like the video and subscribe to the channel before watching the video. To understand today's economic success, let's rewind a little, because Portugal's destiny has changed shape many times over the centuries. Starting in the 1400s, the Portuguese Empire became a major economic power with colonies all over the world. It focused on trade and raw materials activities within its vast colonial possessions in Asia, Africa, and South America. These colonial policies led Portugal to become one of the first global empires in Europe. Of course, there were many right and wrong policies in this process. Let's take a step-by-step look at them so that you can understand them better. Portugal's economy was so strong because it was the country in Europe that had developed the most maritime technology. Prince Henrique's never-ending curiosity led to the exploration of the African coast and the discovery of alternative routes to the spice route by sea. Then, in 1498, Vasco da Gama's sea route to India enabled Portugal to take the lead in the spice trade. In the 1500s, Portugal's discovery of Brazil yielded huge gold and agricultural resources. It also made huge revenues from the slave trade by bringing African people to the Americas. The gold, sugar, and spice revenues from ports such as Goa, Macau, and Angola temporarily brought huge profits to the Portuguese economy. The reason I say temporarily here is that the wrong policies in the Portuguese economy had created an overdependence on colonial revenues, and this was bound to come to an end. Because the colonial wealth entering the country greatly restricted the development of industry. At the same time, this wealth was spent on palaces, churches, and wars, instead of future-oriented policies such as production and investment. In other words, the wealth gained was spent on palaces and wars, not on industry. Another wrong policy that killed industry between 1600 to 1700 was the Methuen Treaty with England. The purchase of English fabrics in exchange for wine led to a decrease in demand and production in the domestic market. In 1910, the dissolution of the monarchy and the establishment of the First Republic led to high inflation, budget deficits, and foreign borrowing until 1926. In 1922, Brazil became independent, which had a negative impact on the economy, but Portugal managed to keep its colonial territories in Africa until 1974. Under Salazar's leadership between 1926 and 1974, the Portuguese economy maintained fiscal discipline and controlled inflation. Even during the years of the revolution, the economy was above average compared to Europe. Even Portugal's colonized overseas provinces were growing, despite the wars of 1961 to 1974, and some sectors of the local economy that were booming. These were led by projects such as oil, cashew, and coffee. Yet Portugal devoted 40% of its budget to defense to finance the wars of independence in Angola, Mozambique, and Guinea-Bissau. These wars overtaxed the economy, stunted growth, increased foreign debt, and inflation soared. After the Carnation Revolution, Portugal's colonial empire was consigned to the dustbin of history. This sudden change in Portugal's economic structure brought with it rapidly deepening economic problems. African colonies such as Angola, Mozambique, and Guinea-Bissau gained their independence very quickly. This suddenly cut off resources. The infrastructure investments made by companies in colonial land suddenly disappeared. One of the biggest challenges was the sudden return of nearly 500,000 Portuguese colonizers. This led to an increase in unemployment and a reduction in social assistance. Pre-1973 data was characterized by solid annual growth rates of 6.9% for GDP, 9% for industrial production, 6.5% for private consumption, and 7.8% for gross fixed capital formation. After the revolution, the rulers decided to nationalize nationalize everything. This included nationalization of banks, insurance, industrial plants, etc. Although this was ideologically revolutionary, economically it was not a good thing. The shrinking of the private sector led to fewer investors and capital fleeing the country. By the late 70s, the unemployment rate was close to 30%, and they were unable to pay their foreign debts. The right step in these years was the application for the European Union in 1977. In 1986, Portugal's application to join the European Union was approved. Gradually, the economy began to recover. The opening of new markets and funding for infrastructure opened the door to steady growth. In graphical terms, Portugal now trades on average 70% of its trade with countries in the European Union. In 1988, Prime Minister Aníbal Cavaco Silva radically changed the economy. The economy is now paying more attention to non-tradable goods than tradable goods. In 1993, after a recession, the economy grew by 3.3%. Before 2008, the Portuguese economy was already built on a weak foundation. The state borrowed heavily every year, which meant that it borrowed more than it spent. The economy was focused on consumption rather than production, and too much money was spent on public and private projects. In 2008, the mortgage bubble burst in the US, shaking the world economy. National banks stopped lending money, causing debt-dependent economies to collapse. Portugal was one of them. There were some important reasons why the Portuguese economy grew with debt. Let's analyze them step by step together. First, there was this government mismanagement and too much borrowing. Between 1974 and 2010, the government spent unnecessary and uncontrolled money on joint projects between the state and the private sector. The government was paying unnecessary money to consulting firms because the country lacked qualified staff. And one of the main reasons for this excessive spending was that government officials collaborated with companies with which they were close and connected. This naturally prioritized their own profits, leading to increased unnecessary spending and excessive salaries and bonuses for executives. As a result, this led to the creation of bloated positions in the state. In Portugal, hiring was very easy, but firing was a very difficult process. So people were coming in, but not going out. The second reason was that the UPN Bank gave national loans to benefit its own executives. The BPN Bank's bad loans led to the bank's bankruptcy. This bankruptcy led the state to fork out 3.4 billion euros. Similarly, the collapse of the BPBP cost taxpayers another 450 million euros. The third reason was overspending on infrastructure projects by the state with private companies. Between 2008 and 2010 alone, 896 million euros were spent on highway leases. This resulted in hundreds of millions more money being spent than usual. The fourth reason was the swap agreements that some companies, especially state-owned companies, made against foreign exchange and interest rates. These deals were so complex and inefficient that the state lost 3 billion euros. As a result of these fundamental problems, in April 2011, Portugal confirmed that it had received a financial bailout package worth 78 billion euros from the IMF and the European Union, following Greece and Ireland. However, the granting of this bailout provoked strong reactions from some European Union countries, such as Germany, which publicly announced that future bailouts would be accompanied by penalties. According to data from Trading Economics, the Portuguese economy grew by 1.5% in the last 3 months of 2024 compared to the 3 months before that. One of the biggest reasons for Portugal's economic growth was the 3.4% increase in exports by volume. Looking at other sectors, there were strong performances in technology, renewable energy, and specialized manufacturing. Portugal's export market across different sectors has enabled the country to compete globally. On the import side, even though imports increased by 4.8%, the trade balance remained positive as exports had a higher value added. Consequently, the trade balance remained positive, strengthening Portugal's position as a stable economic player. According to the Banco de Portugal, the Portuguese economy is expected to grow more slowly in 2025. After growing by 2.3% in 2023 and 2.0% in 2024, growth is projected to slow to just 1.5% in 2025. The recession in Europe and the risk of energy costs rising again have made exporters cautious, but the economy is still expanding, just at a softer pace. On the inflation side, the general rise in prices has been a big problem for Portugal and many other countries in recent years, because in 2022, prices rose by about 8%, mostly due to energy and food costs, but the situation is gradually improving. When we look at inflation rates, they dropped to 5.3% in 2023 and 2.6% in 2024. According to forecasts, it is expected to fall to 2.0% in 2025. As a result, the Portuguese economy has experienced many fluctuations throughout its history. Even though economic indicators are showing positive signs, new dynamics are emerging in social life. In the last few years, however, we can see that they have learned from the mistakes of the past. On the other hand, there has been a significant increase in migration to Portugal recently. One of the most important reasons for this increase is the Digital Nomad Visa that came into force in October 2022. People earning high incomes prefer to move to countries with lower living living costs and spend the money they earn there. Portugal's visa not only offers remote workers the right to live and work in Portugal, but also a family-inclusive and long-term path to citizenship. But there is a side effect. The growing demand for housing is driving up house prices, making life more and more difficult for locals. Portugal has learned to face the ghosts of the past, but now it needs to be ready for the quiet storms of the future. There are many details and topics to talk about, but time is limited. Don't forget to subscribe and like the video.